let's talk about Hertz, Pete. Your friend Adam Jonas comes out and basically changes from equal weight to overweight for Hertz. Now, just last week, Pete, you and I were talking about, God, they've got a lot of these Teslas stacked up. They're going to have to sell 20,000 of them because they're just not renting. Because, I think people see things like, hey, in the wintertime, I don't know if I want to rent an electric vehicle that gets really crummy distance because of the cold. Maybe that's the reason, I'm not sure, but all of a sudden Hertz makes a big U-turn here, Pete.
Adam Jonas, actually, he's giving them credit, John, for being decisive on how they made this decision. Now, that being said, I would just warn people to understand, we always want to break down the fundamentals, right? Well, the fundamentals of Hertz, which we did break down when this stock was going south in a hurry, they still have the same problems, John, despite the fact that they're making the move with the EV. And I think it is the right move, but huge short interest in this name. The debt is at absolutely preposterous levels, and the cash burn is incredibly high. So if you're wanting to be in this name because Adam Jonas is giving them kind of a move to the upside in terms of where he was in positioning, I can kind of get it. But when I look at the fundamentals, John, something else is much bigger than just this EV problem. That's just one problem that they did address. They haven't addressed a whole lot of other problems, which is why they've got so much debt and why the shorts are so big in this name.
Yeah. Remember last week, folks, when Pete said, it's a $3 billion stock or something like that, and yet they had $18 billion in debt. Ouch.